In the Forex market, every transaction starts with an order. This is the mechanism that allows traders to buy or sell a currency pair based on their strategies, objectives, and market analysis. Understanding the different types of orders and how to use them is essential for successful trading. What is an order? Simply put, an order is an instruction you send to your broker to execute a trade. This trade can be the buying or selling of a currency pair at a specific price or under certain conditions. Types of orders in Forex. There are several types of Forex orders, each serving a specific purpose. Market order. This is an instruction to buy or sell a currency pair at the best available market price at that moment. These orders are executed immediately. For example, if you decide to buy EUR/USD at the current price, you are using a market order. Limit order. This is an instruction to buy or sell at a specific or better price. These orders are useful when you want to wait for a more favorable price before entering the market. For instance, if EUR/USD is at 1,000, you can set a limit order to buy it if it drops to 1,950. Stop order. This is an order that activates when the price reaches a predefined level. Stop orders are generally used to minimize losses or secure profits. A common example is a stop loss, which automatically closes a trade if the price moves against you. Pending order. These orders allow you to schedule the buying or selling of a currency pair in the future when the price reaches a specific level. Subtypes of pending orders include buy stop, buy above the current price, sell, stop, sell below the current price, buy, limit, buy below the current price, sell, limit, sell above the current price. How to choose the right order. Define your goals. Are you seeking immediate entry or waiting for a better price? Consider your analysis. Use technical or fundamental analysis to determine entry and exit points. Manage risk. Always pair your orders with risk management tools like stop loss and take profit. Advantages of using orders in Forex automation. You can set your goals and let the system execute the trades automatically. Greater control. It allows you to be strategic and avoid emotional decisions during market volatility. Protection. With orders like stop loss, you can limit potential losses. Conclusion. Orders are essential tools that every trader must master. By understanding the different types of orders and how to apply them, you can significantly improve your results in the Forex market. The key is to use them strategically and align them with your trading goals.